On this hot sheet, I discuss Case-Shiller Home Price Index along with Robert Shiller's latest predictions, the FHA Home Price Index, and mortgage demand. Today is Wednesday, July 26, 2023. I am Byron Lazine, and the hot sheet starts now. Welcome back to the hot sheet. If you are in the live chat, love to know which market you're tuning in from. Today is Wednesday. It is the day that the FOMC is going to come out with their final decision, which is all but a 100% guarantee that they will raise the federal interest rate. I'll be tuning into that later today and taking notes and breaking down tomorrow on the hot sheet everything that the Fed, Jerome Powell specifically, says about the housing market and where we are going into the future. In honor of Jerome's decision today, you can use the code Jerome, Jerome. If I spelt that right, I think I did. Jerome is the code to use for 10% off your BAMX subscription. BAMX is where I release all of the hot sheet daily downloads every single day, all in one place, as well as our courses, live streams, and our private community. Today, in fact, I'm doing a live stream on online leads. That's going to be today at 3 p.m. Eastern for BAMX members only. I'll be breaking down online leads and specifically getting into Zillow leads. There's been a lot of big deals across the country on those Zillow leads at a time when agents need more deals. So use the code Jerome to get 10% off of your BAMX membership. Let's get into, we got a lot of house price conversation today. I've got Case-Shiller. Their numbers just came out. They tend to be the gold standard on house pricing index. I've got a Robert Shiller prediction right after that, and then FHA Home Price Index as well. And then we'll get into some mortgage demand before we sign off and await the Jerome Powell decision. All right, the big news, big headline for Case-Shiller is that May was good. May was a great month. May we were up again for the fourth consecutive month on home prices as tracked by Case-Shiller. You can see here, and I'll drop this in the daily download, this fortune piece using Case-Shiller data, this fortune chart rather, where we've got 4 straight months of home price increases per Case-Shiller. That is after 7 months of home price declines. So where are we year over year? Well, Case-Shiller's got us down 0.5% year over year. So year over year, where they're looking at it, their data ends in May. So they just came out with May, where we were up. Let's see here. May, we were up 1.2% for the month of May. Really good number. They got us down negative 0.5% year over year. All right. That would be after having May 2020 to May 2021, a 16.91% rather increase. May 2021 to May 2022, a 19.99, call it 20% increase during that time frame. And so, yeah, we're down 0.5% year over year right now. It really has to do with quarter 3, quarter 4 last year when we ratcheted up those rates so quickly. The Fed wanted to break the housing market. Well, they more so paused the housing market. Okay. After a 17% and 20% jump in May 2020 to basically May 2022, each year respectively, 17% and 12-month jump, 20% the next 12-month jump, to just lose a 0.5 point here year over year on home prices on the Case-Shiller index feels more like a pause. Feels more like people are saying, you know what, I'll just hold my asset. The price isn't going anywhere, as validated by the last 12 months numbers, and I'll see what happens in the future. That's been more of the story than any type of housing market collapse or, the housing market is going down. A 0.5 point is certainly nothing to be concerned with. Year to date through May, we're up 3.68%. So over 3.5% up year to date. And another way to look at these big gains would be March 2020 to June 2022, when we started experiencing some of those month-over-month declines, when we went up 43.3%. Still be up over 40% in almost every market today. Here's another table that we can look at on Case-Shiller Home Price data, as just released here yesterday. Okay, so nationally, again, year to date up 3.68%, month over month 1.22%, and down from the peak, only down 1.03%. Okay, so we're down the 0.5% year over year, but down from the peak, we're talking about just 1% off. I think we would take, and that's in line with what we saw in rent prices yesterday, year over year, down 1%. It's nice to see those rent prices coming down. I spent some time on that yesterday. Since March 2020, since when it all began, March 2020, home prices are up over 41%, almost 42% nationally. Okay. We can take a look at some of these big markets. You drop in the comments if you want to want me to jump to a specific market. These are, what are these? The top, I guess, 25 here is tracked by Case-Shiller. You've got Atlanta since March 2020 up 50%, so over the national. Let's take a look at just everybody since March 2020 who's over the national number. That would be Atlanta at basically 50%. Okay. Boston isn't one of those markets. That's surprising. Charlotte is over 54.25%. So nationally, 42% since March 2020. You've got Atlanta 50, Charlotte over 54. You've got Dallas at 50. LA, please. We've got LA is at 40% since March 2020. They're not one of those that is over the national market. Just breaking down Los Angeles a little bit more, you've got month over month up 1.2% basically. Everybody on the list is up month over month. Okay, all these big markets. Year to date, Los Angeles is up 5.46%, one of the biggest on the list. Okay, just a handful are up over 5% on the year. So LA having a great year. Year over year, they're one of the markets in the red, down 3.07%. And peak to trough, LA's off one of the higher numbers, off 8.17% peak to trough. Jacksonville, I don't know if Jacksonville made this list. Jacksonville's not on this list. Sorry, Duval. OKC, they're not going to be on this list. They're not going to be big enough for this one. This is, I think, the 25 or something major markets. No offense, Jody, to OKC. Milwaukee make it? Milwaukee didn't either. All right. Sorry, guys. This is Case-Shiller, just looking at these top 25 largest metros or largest markets. We'll take a look here. Who else is up over 42% since March 2020? Miami, the big winner, at 63% since March 2020. The national average, again, is 42% up since March 2020. I've only highlighted, we've got Charlotte. I only highlighted 3 so far. Oh, Atlanta, 4 that are up over the national number. Minneapolis, way below it at 30%. Phoenix is one of those markets, 54%. San Diego, 52%. And then Tampa, almost 64%. Tampa, the leader in the clubhouse. So you've got a lot of these warm weather locations: Atlanta, Charlotte, Dallas, Miami, Phoenix, San Diego, Tampa, all warm weather locations. Denver, we've got Denver on the list. Denver's up 0.74% month over month. Year to date, Denver is up 4.23%. That's a good number year to date, really strong number. Year over year, they're down 4.85%. So, over 4% more than the national average. Since March 2020, they're up 38.61%. And peak to trough, they're down 9.51%. So Denver's one of those markets that dipped down lower in the months where we were seeing home price losses. Denver was one of those markets that experienced a sharper decline there. Okay. There you go on your Case-Shiller report. I'm also dropping this one down. I think this is a fun table here on Case-Shiller. This goes all the way back to 1975. I mean, look at 1975 to 1989. There wasn't, I guess there was 1 month in the 80s where we actually saw negative home price appreciation. It was in March of 1982. So from 1975 up until August of 1990, you only had 1 month of negative home price appreciation. Okay. I guess when they have these negative 0%, that means it was just under 0%. It was basically flat. Interesting. Then in the 90s, you had some months where you had negative home price appreciation. And then from the late 90s all the way until obviously the housing bubble, you saw nothing but month-over-month home price increases. Then you had the housing bubble. And then we experienced another really long run of nothing but month-over-month home price appreciation, certainly since 2020 until June of last year, where we started to see month-over-month home price declines. The majority of the home price declines have come from 2006 till today. When looking at the 1975 until today chart. But there's a lot more months when your home goes up in value, going all the way back to 1975, than it does going down in value. Another great chart for people who are curious about the future of the real estate they're buying today. History tells us that it will keep going up. Robert Shiller, of course, is one of the partners on the Case-Shiller Index. He's a Yale University economist, and he's predicted things like the housing bubble back in 2006. He just did an interview. He was interviewed on CNBC last week with his home price crash or sustained boom prediction. He's not predicting, by the way, either one. Okay, so Robert Shiller went on CNBC's show last week and said, we're not going to see a housing boom here moving forward, nor are we going to see the crash. His quote was, the housing market is different than the stock market. It's normally forecastable, right? We just looked at that table there from 1975. It's pretty consistent. It has been growing since 2012. It has about 10 years of steady growth in home prices, but it may be coming to an end with this interest rate rising cycle. You would think that after the last couple of years, I'm sorry, the last year of these interest rate hikes that the Fed has bestowed upon us, these high-paced interest rate hikes. By the way, when they raise the federal rate later today, when they announce that decision, that will be the highest level in 22 years, okay? They went up so quick, you would imagine that home prices would drop down, because think about it. In March of 2020, let's call it March of 21, when interest rates got really good, you could get almost $500,000 house for $2,000 a month. So a lot of people wanted that. A lot of people were like, oh, I can afford a $500,000 home, $2,000 a month. The demand was huge on that. Well, today, $2,000 maybe gets you half of that, $250, $275 for the same house. And so historically, when that happens, you see prices come down to what people can afford. That $500,000 house should start to come down, because $2,000 only gets you so much on the mortgage. Well, it hasn't. It hasn't. So what has come down? Demand has come down substantially. And I know we talk a lot about, we got so much pent-up demand. We got so much pent-up demand. There's a difference between pent-up demand and demand that's in the market taking action today. There is demand in the market, or there is pent-up demand that is not in the market today, rather. They are on the sidelines. So this has frozen up, but prices have held so strong because people are operating on cheap debt. They're not unemployed, and there's a lot of 42% of people own their home cash. So prices aren't going to come down. I'll just hold and I'll preserve value as opposed to '06. I got to get rid of this property because I've got a bad loan and I'm losing my job. Two totally different worlds. So I agree with what Robert Shiller is projecting here. He's projecting a sideways market on home prices. 1%, 2%. It's what we often see when we look at, Goldman Sachs or Black Knight when they project out into the next couple of years. We're talking about 1%, 2%, 3% or less gains year over year on home price appreciation. Robert Shiller, he thinks that the fear of interest rate increases has influenced people's thinking. It's not just the homeowners. It's new buyers who want to get in before the interest rates went up even more. They want to lock in. So that's been a positive influence on the market, but he believes it's coming to an end. He doesn't believe that there's enough demand to sustain these 7% interest rates. Last summer, Shiller suggested to CNBC that the pandemic housing boom could be replaced by a period of declining house prices. In August 22, he said the Chicago Mercantile Exchange has a future markets for home prices that's in a Backwardation now. I don't even know what that word is. That is in backwardation. There you go. Backwardation now. Home prices are expected to fall by something a little over 10% by 2024, 2025. When national home prices measured by Case-Shiller did fall 5.1% between June 22 and June 23, they've now since rebounded this 2.8% since April. Shiller hinted that recent national home price gains, though, might be a seasonal blimp. Part of what's happening in the increase of home prices is just seasonal. It's simply that, he believes. It's the summer, and it's typically going to go up in the summer. We'll see whether we get a soft landing, talking about recession possibilities. It is a possibility, but I'm not panicking one way or another. Does appear that the worst case scenario, that this Chicago projection that Shiller pointed out, being a 10% drop in prices, we've seen that in Austin. We've seen that in Boise. We've seen that it got down as much as almost 10%. We just went over LA, right? And now LA is back up big this year. Could nationally experience, in a worst case scenario, a 10% decline if interest rates stay at 7% or more for longer as we start to churn through some of this demand. Robert Shiller makes a good point. We had seasonal demand in the spring, which is going to create closings in the summer at an elevated price. Every winter, you will see prices withdraw, but you're also typically going to see inventory withdraw. And we're withdrawing from a level of basically zero. So the lower the inventory gets, the harder it is for me to believe there's any possible scenario where you're going to see a widespread double-digit 10% or more drop in home prices. I think you could continue to see, a deep freeze in the market, a cold war, as I've called it, a pause on the market, meaning just substantially less transactions than we've been accustomed to. Of course, it's not a pause. Doesn't mean there's no deals going on. That there are 4 million deals. You times that by 2, there's 8 million deals. I get it. There's a lot of deals, but it's not 12 million anymore. 8 million and 12 million. That is, 30+% off on the amount of transactions. That is just the reality that we're faced with. All right. Case-Shiller is one way to look at. Another way to look at these home prices would be with the FHFA. They have their own home price index, and their monthly report just came out yesterday as well. So they've got data through May 2023, just like Case-Shiller. Okay. FHFA house price index was up 0.7% in May, little less than Case-Shiller, but it's up 2.8% from last year. Okay, where Case-Shiller is down 0.5% from last year. Home prices rose in May, up 0.7% from April, according to the Federal Housing Agency, FHFA, seasonally adjusted monthly house price index. They rose 2.8% year over year. It's a big difference from Case-Shiller being down 0.5%. Okay, so you could say when somebody asks you about national home prices, well, some have us year over year just down 0.5%, and some have us up as much as 3%. And really, this is a local discussion, and we want to bring this back to our local market here. But that's what's going on nationally. The previously reported 0.7% increase in April and remain unchanged. They have census divisions, 9 of them. Seasonally adjusted monthly price indexes from May 2023 to May 2025 range from negative 0.5% in New England division to plus 1.7% in the Pacific division. 12 months changes were 0.27% in the Mountain division, minus 2.7%, and plus 5.7 in the East North Central division. I did pull some of the data that they have and turned it into slides. Put that down below in the BAMX daily download. This chart's fascinating here. Going back to 1991 monthly house price index for US from January 91 to the present. It looks like it makes this chart, the way it's expanded and stretched out, makes the housing bubble look like just like a little blip on the radar. Makes it look like nothing, no big deal. It shows here that we peaked out last year and then continued to go up. So, another good indication of over time what owning real estate can do for you on home price appreciation. Compound annual growth rate since January 91, 4.4% compound annual growth rate since January 2000, 4.7%. Compound annual growth rate since January 2012, 7.5%. That number keeps getting bigger. And when you compound year over year over year, compounding on top of a bigger number. So compounding is the way to make money. And there you go. Cumulative monthly house price change relative to the prior peak for the U.S. This just shows basically us bottoming out here in the housing crisis and then doing nothing, to Robert Shiller's point, but accelerating up since 2012 in such a big and significant way. All right, I think that wraps up the FHFA. Giving an update. I got one more actually here. This one's actually really interesting, I thought, because it localizes it for you. Shows that in the Pacific and in the mountain regions, year over year, we're down in both of those respectively. But in all other regions, the price change from May 2022 to May 2023 were up. West North Central, West South Central, East North Central, East South Central, New England, Middle Atlantic, and South Atlantic. Obviously, it also has the year prior, May 2021 to May 2022, all of those being double-digit gains. So some good local data there, and that'll be down below in the daily download as well. All right, let's just take a quick look at demand. I mentioned demand as being what I believe it is really holding prices where they're at right now. If we had the same demand as last year or 18 months ago when interest rates were lower, then of course prices would take off. But not everybody can afford these interest rates, and that's why demand continues to drop, and it did drop again week over week. And this is one of the reasons why Robert Shiller is looking into the future saying, I don't know if these home prices continue to hold month over month when we get into reporting on November and December and January, because mortgage applications continue to decrease. Mortgage applications decreased 1.8% from 1 week earlier, according to data from Mortgage Banker Association. The MCI, a measure of mortgage loan application volume, decreased 1.8%. On an unadjusted basis, the index was 1.5% compared with the previous week. The refinance index decreased 0.4% from the previous week and was 30% lower than the same week a year ago. The purchase was 23% lower than the same week a year ago. Mortgage rates were essentially flat last week. They've been at basically, I feel like 7% for the last 3-4 weeks. Joel Kahn, MBA's vice president and deputy chief economist, a 2.5% decline in purchase activity, partly driven by a 10% decrease in FHA applications, pushed the purchase index to its lowest level in over a month. This could be a sign for the second half of the year. The decrease in FHFA purchase applications contributed to an increase in the overall average purchase loan size to $432,700, its highest level since the end of May. Listen, you start to get even lower demand and rates staying at 7% for longer, that's where you could see a winter, a second half of the year, similar to last year, where we started to see month over month declines. If we see 7 months of month over month home price declines like we did last year, that will be a scenario where you'll be starting to see bigger numbers on these year over year home price appreciation. Obviously, what matters most is what's happening in your market, in your neighborhood. What are the prices reflecting there in comparison to the macro? The macro can be a leading indicator of what might trickle in to your micro market, but you need to know both inside and out, especially today in a environment of door openers and digi signers, frustrating more consumers now than ever. You want to be the knowledge broker and make sure that you're separating yourself from the pack. One way to do that, of course, is jumping into BAMX. Use the code Jerome for 10% off your subscriptions. The lowest price that we're ever going to present. It ends today. The minute Jerome steps off of the podium,
I'll be watching.
Bobby's going to be watching. He's just going to drop the hammer and the 10% out of BAMX. Become a better agent. Become a better marketer in your game by joining BAMX today. 10% off of that. You also get access to all of our early releases. Like the BAM Bash that's happening in August at the Tom Ferry Summit. BAM Bash is happening night 1 on August 22nd. If you're like, well, I'd really like to go to the BAM Bash, but I don't have my ticket for Tom Ferry Summit yet. Oh, you can do that. There's a link down below to get your ticket for the Tom Ferry Summit. It's the lowest price on the internet. You get $100 off your Tom Ferry ticket, and you can come to the BAM Bash. If you're a BAMX member, you're guaranteed entry into the BAM Bash. Last year, over 300 people unfortunately were denied entry because of capacity, but all BAMX members are guaranteed entry, guaranteed VIP accommodations, which means we pay for your drinks and you don't pay for them at the BAM Bash. We're also announcing our Naples event. It better be today or I'm just going to delete the entire YouTube channel. I think we've been teasing it for the last 2 days. Did we announce it yesterday?
I believe so.
Eric, if you're listening, we better announce the Naples event today in the BAMX Facebook group, or I'm deleting everything off of the internet.
Not even us, just everything.
Yeah, I'm just going to delete everything. All right. All right. Appreciate you guys. Thanks for tuning in today. And if you're interested in that live stream I'm doing today at 3, that'll be for BAMX members only on online leads. Make sure that you get in. We'll see you guys back here tomorrow on the hot sheet. Have a great day. Until then, toodaloo.